Hello, 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 and welcome. We're back, and it's working this time. We have audio. Did you check? Did you check to make sure it's on?
Yeah.
Well, whatever.
I see the little green thing, so I'm going off that, but we'll see if our fans respond.
All right.
Our biggest fan.
Yeah, so we are live. You can interact with us if you so choose. We'd be happy to have you interact with us. We can see comments. We can't give you specific recommendations, but we can say hi. Hi, Jace. Thanks for tuning in. Okay.
Is it working?
It is working. Yes, we're good to go. Okay, so let's jump right in, man.
Yeah.
We had a blowout week for earnings. The stock market was at all-time highs across the board. So what a week for the bulls, at least if you're a bull. So the S&P 500 and NASDAQ both hit all-time highs, the sixth straight week of gains for both indexes, the longest winning streak since October of 2024. The April jobs report came out this morning with a fresh 115,000 jobs that were added for the month of April. That's nearly double the 62,000 Wall Street expected. The unemployment rate held steady at 4.3%. Meanwhile, the Iran ceasefire hit a serious test. Both sides exchanged fire in the Strait of Hormuz. Oil spiked back above $114 a barrel on Monday before pulling back to around 101 by Friday after Iran sent an updated peace proposal through Pakistani mediators. I believe that happened this morning. Kevin Warsh is now one full Senate vote away from becoming the next Fed chair to succeed Jerome Powell. The next that vote expected the week of May 11th, and AMD and Disney both delivered big earnings beats that lit a fire under tech and consumer stocks. There's a lot to unpack, so let's jump right in.
A lot of big movers.
A lot of big movers.
Start with this week in the markets. Talk about a little bit of earnings.
Yeah, let's do it. So the S&P 500 closed this week at 7,337, touching new intraday all-time highs, marking the sixth consecutive weekly advance, the longest streak since October of 2024. The S&P 500 rose 0.81% Tuesday to a record of 72.59, then surged 1.46% Wednesday. Wednesday was a strong day across the board to 7,365 on Iran deal hopes. NASDAQ Composite also hit record highs multiple times this week, closing Thursday at 25,839, up over 2% from on Wednesday alone. All three major indexes are now well above their 2026 starting levels, despite an active Middle East conflict. So let's talk a little bit about what's driving that rally in stocks. And you mentioned it just a second ago, Zach, and that is earnings. So specifically, we're going to talk about AMD and Disney. They had blowout earnings. The range of my notes here. Okay, so AMD surged 18.6% on Wednesday after their Q1 blowout 2026 report. The revenue was $10.3 billion, which is a 38% year-over-year increase. Data center revenue was $5.8 billion, which was 57% year-over-year. These numbers are astronomical. We talked about Qualcomm too. They beat Q2 estimates. Their revenue was $10.6 billion. Their automotive revenue alone surged 38% year over year. So these hyperscalers that are building out these data centers and then farming out the cloud or server space are reporting these numbers because they're buying the picks and the shovels, if you will, for the AI gold rush from NVIDIA, Qualcomm, AMD. And those are the guys that are benefiting the most right now, that are really riding the wave of all these purchases of the infrastructure that's being built out by these hyperscalers like Amazon and even Intel's in the game. Anybody that's building data centers, they're essentially all chasing the same model. But these guys that are reporting these numbers right now, these the actual semiconductor manufacturers and whatnot are the ones that are really benefiting. So AMD and Disney had a really good week, and earnings is really what's driving the market right now, and that's really the story, or at least the stock market.
Oh no, I was giving you a yeah.
Yeah.
I love it.
Thank you for the validation. So let's shift gears a little bit. Talk about Iran. The ceasefire under severe stress. Monday, ceasefire nearly collapsed. Brent crude surged 6%. The VIX spiked, and markets briefly priced in a full resumption of conflict. But Tuesday, Defense Secretary Hegseth said the ceasefire certainly holds. Markets and oil reversed sharply. Brent fell 4% to 109.87. WTI fell 4% to 102.27. Wednesday, Thursday, U.S. sent a formal memorandum of understanding through Pakistani mediators. Iran confirmed it was reviewing the proposal. And then this morning, we got word back that Iran sent an updated peace proposal through Pakistan. Trump said he was not satisfied with the offer. And that is where we stand currently with the Iran conflict. So to your point, Zach, even though that we've had this in the backdrop that's just kind of like making markets nervous, we can see added volatility through the VIX that's been added to financial markets because of this conflict, but it still just is not, the market's in a way kind of still shrugging it off.
Yeah. Profits are king here, and
that's it.
Oil can affect the profits, but right now it's not hurting them enough.
Well,
as you see by the numbers on the earnings.
Yeah, and the LPL strategist that we were just talking about this quoted said despite lingering geopolitical tensions and oil above $100 a barrel, markets have continued to push higher. The answer comes down to three words: profits, and
profits.
Yeah. So S&P 500 Q1 earnings season continues to track above 27% growth year over year. So crazy numbers coming from the earnings reports, but that is what is propping up the stock market right now. I'm going to run over a couple of key takeaways, and then I'm going to toss it to Zach, and he's going to go over what to watch next week, and then maybe a little bit about Kevin Warsh's expected Fed.
Yeah,
that's exciting. It's sad to see Jerome Powell leave, and I don't know if that's it's like a sign of me getting like older or what, but I'm like, oh man, I bet he's been with us for so long now, and like so much of my financial career, it's like we made memes about him, you know. And
it's my first Fed chair.
It's my first Fed chair.
Can't leave me now.
Oh man. Okay, so a couple of key takeaways. Jobs report blew past expectations, but read it carefully. 115,000 jobs. We didn't really go into this, but just FYI, like the under the hood and what really made up those 115,000 jobs. It sounds like a strong versus the 62,000 that was forecasted. And it is the first back-to-back monthly gain in a year, but wage growth missed estimates. Labor force participation hit a multi-year low, and gains were concentrated in healthcare and transportation. The labor market is resilient, but it is narrowing. And there were two people on Bloomberg this morning talking about that exact thing, in the shift under the hood in the labor market between maybe away from white collar, more towards like blue collar jobs. But either way, there is some kind of shift happening there. Yeah. The Iran situation is the most important variable nobody fully understands. The ceasefire, and it's unpredictable, right? The ceasefire nearly broke down Monday, but then came back. Both sides exchanged fire Thursday. Iran sent an updated proposal this morning that Trump rejected as insufficient. Every headline this week moved oil. Until there's a formal, durable agreement, oil volatility is market volatility. So if the oil market's moving around and like whatever's happening there, it's moving the markets because of the expectation that oil prices affect inflation. It doesn't just affect energy costs like gasoline and stuff that you put in your car, because we all seen gas prices tick up over the last several weeks, but it affects other petroleum product prices too. And that gets eventually gets passed on to the consumer and can cause inflation to spike. And this is not the time for inflation to be spiking. We just got over this really bad inflation spike. Like historically, they usually last about 1 to 2 years of like heightened inflation. And then it comes down, but we just got through that period. So this is not doing any favors to the Fed or to the consumer for that matter. Kevin Warsh is effectively the next Fed chair. The Senate vote is a formality at this point. His confirmation hearing made clear he is more hawkish than Powell. Some could argue that could be good, could not be good. Skeptical of forward guidance and focused on the balance sheet. Rate cuts in 2026 are not the base case any longer, so plan accordingly. If you're an investor and if you don't know what that means, you can come talk to us. We'd be happy to discuss that with you. AMD and Disney are reminders that earnings season still has the power to move individual stocks dramatically. 18% and 8% for AMD and Disney respectively, single-day gains that are normal and reflect genuine surprise, not just noise. The AI infrastructure build-out is still accelerating. AMD's data center revenue rising 57% year over year, like we just mentioned, is the real world proof point. And I think markets are laser focused on that as far as like earnings in that part of the market. 6 consecutive weeks of S&P 500 gains through an active war, above target inflation, and a leadership transition at the Fed. Markets are pricing in a diplomatic resolution and continued earnings strength. If either assumption breaks down, the correction will be swift. Markets move way faster nowadays, especially with technology being where it's at. And I think we're kind of like getting used to that. Yeah. So I wouldn't be surprised if it is swift, if we do have a correction. But trying to time it has cost investors 6 weeks of gains already. So if you've missed the last 6 weeks, and this is a great segue into the point that we like to make over and over again, that timing the market is not ever in your favor statistically. It's just not. Okay. Mm-hmm. So time in the market is always greater than trying to time the market. And we have all the visuals and the statistics to prove that generally speaking, on average, the average investor does not beat the market or do better if they try to get in and out and time things. And the last 6 weeks is a great example of that, because would you have thought that we would have had as strong a market rally that we had over the last 6 weeks with the backdrop of the geopolitical stuff? Take your pick.
I can confidently say I thought it would have gone down more so than
I would have too.
And it's been strong.
Yeah.
And if you just gone up,
and if you sat out on the sideline, you missed this last 6 weeks. April alone was like a 10% gain in the S&P. Yeah. And what's the stat that we always mention on here is if you miss the best 10 individual days, even over a 20-year period, I think it was 94 to 2020, for a 30-year period, maybe, whatever it is. You can, as long as there's 20 years in there, right? S&P 500 returns, you take out the best 10 days, your returns almost get severed in half. And those are 10 individual best days. And so chances are we could have had one of those days over the last 6 weeks. And if you were sitting on the sidelines, you missed out on that. And chances are you probably need that happening if you're trying to hit your long-term investing goals. So, okay, Zach, you want to talk a little bit about maybe Kevin Warsh and then what we got on the docket for next week economically? Yeah,
that sounds good. So, as everybody knows, Kevin Warsh is probably going to take over as Fed chair for Jerome Powell. This is Trump's pick. It's someone he likes. I see a lot of people saying he's just going to be kind of Trump's puppet, but I don't think that's the case. That's just not how the Fed operates. He might listen to Trump more so than Jerome Powell does, but that's not what's going to happen. So Kevin Warsh is expected to be confirmed and sworn in around May 15th. He will chair the next FOMC meeting on June 17th. So he'll be coming up quick. The chair leads press conferences, shapes the Fed's communication strategy, and sets the current tone for policy discussions. They're not actually making the final decision on rate cuts or rate hikes. So this isn't going to come down to Kevin Warsh got told by Trump to cut rates. They're getting cut this week.
Yeah, and that's a good point. It's not that. I know we see Jerome Powell and we think he is the man. He's the head of the Fed. Yeah. But it's like there is a committee, of 9 or 12 of them or whatever, the governors that vote, that make those decisions collectively.
Mm-hmm. Yeah, and the chair just has one of those votes. He doesn't get special privileges. He can't overrule the committee. It comes down to an unbiased committee. But so his new inflation framework suggests more data dependence and less of the we're going to cut 3 times this year style communication markets have grown accustomed to. So what that means kind of is that Jerome Powell would set the roadmap out for us pretty often, and we might see less of that with Warsh. He might not give us the I hate to say transparency because that sounds bad, but maybe the transparency.
No, but that's a good point, because the markets have accustomed to, think about like the difference in presidential administrations between Trump and Biden. Like Trump was in office for 4 years, and from a policy standpoint, markets would listen to what he was having to say, and it was like how he is. It's just information. Just he's just blasting and everything. And he talks fast, right? And it's crazy amount of information in a very short period of time. And then you get Biden, and it's like the exact opposite. And markets had to get. I think it was most noticeable when Trump got back into office after Biden, because the first few months he was in office, markets were trying to figure out what to make of all of it. And it's almost like they had grown accustomed to the communication style of the presidential administration. And I think that's exactly what's going on with the Fed. Because if Warsh has a different viewpoint, you can't listen for the same subtle hints about their projection of rates and what they're going to do. It'll be a totally different vibe. And so he's bringing a completely different vibe to the Fed.
Yeah, he definitely will. Everybody's different, and them two in particular are different people for sure. So people are going to have to get accustomed to that, and the markets especially. I think it'll be interesting to see his first FOMC meeting. He'll probably take it easy the first one, I would assume, and not give too much forward roadmap. But I think he'll lean into that later on. I hope so. I like the forecasting that the Fed does. It's usually pretty insightful.
Yeah, you did like a project on it in school, didn't you?
I did. I am a Fed Challenge member for the Shriner.
Hey,
any Shriner students listening, join the Fed Challenge team.
That's what's up.
Killers.
Fed Challenge team.
So now I guess we can go into what to watch next week. So of course the Warsh Senate confirmation is going to be May 11th. And then we get CPI on May 12th. That is inflation data. Consumer Price Index. That isn't the Fed's preferred index, but it is a very important one. And then May 13th, we get PPI, Producer Price Index. So that shows the rising cost for producers, which is kind of that first line of inflation. So what we see in this report is likely to affect next month's CPI and PCE and those down the road. So for both of those, very important, hopefully cooler than expected numbers, but we'll see. Then retail sales are going to come out May 14th. That'll give us a good look in consumer spending and how the habits are changing with the volatility going on, and rising gas prices in particular, I think, is what people are eyeing, seeing if that's hurting the spending power of consumers. And then,
which it hasn't yet, but however, consumer confidence has still been very low. And I think we just got that survey last Friday, maybe.
Yeah.
But
it's a funny kind of dynamic that has right now, where the spending is staying, but the sentiment is going down.
Yes.
So I just imagine we're all getting sadder when we hand in the same dollar.
Yeah. Like it stings worse when I check out now.
Yeah. Oh man. And then we get GDP Q1 second estimate on May 28th. That'll be a good look forward as to what the big experts are thinking for GDP numbers this year, and Q1 in particular, and hopefully around 2%. We'll see. Hard to say. And then ongoing, something to look forward to, hopefully an Iran-US peace deal, but that's a little optimistic.
Yeah,
although I do think that Trump understands it needs to get resolved quickly. He was the biggest proponent of getting a rate cut in as fast as possible, and this war has pretty much nuked the chances of us getting a rate cut
this year.
Even with Kevin Warsh coming in, it's just not happening with oil prices. It's elevated.
Well, and it would be really nice if we got an update on that like this weekend before the markets open back up Monday.
Well, it seems like most of the updates on the weekends are really bad ones, and then by Monday it's like, all right, we're going to stop right now.
Yeah. Markets are about to open, cool it.
Yeah. And then I guess keep your eyes on earnings as well.
Yeah.
A lot of people are talking about the AI bubble. When's it going to burst? But you got to consider that a bubble is, in my take, valuations outrunning earnings, and the earnings are following along.
They are so far, and they're helping prop up those valuations. So that's why the markets are so focused on earnings right now. So we'll continue to get earnings over the next few weeks, along with this economic data and things that Zach just mentioned. So let's wrap the show. But before we do that, I wanted to mention we have two things happening. This is one. So tomorrow morning we're going to be at Camp Verde store a little bit before 8 a.m. Call it 7:30. You are welcome to join us. We have an Adopt a Highway section of highway on 173. It starts at Camp Verde store and runs about 2 miles going to the county line. And we are responsible for keeping that clean. And we haven't been out there this year yet, so we need to get out there. And some of our friends from Guadalupe Bank are going to come out and help us with that. But if you're in the area and you want to come help us keep our Texas highways clean, please do so. Come meet us at the Camp Verde store before 8 a.m. tomorrow. We will have safety vests, the like buckets and grabbers, trash bags, all that kind of stuff. And then I also wanted to mention our free market outlook webinar and tax smart investing webinar that we are hosting on June 2nd, which just happens to be my birthday. Woohoo! So if you attend this, it would be the greatest birthday present ever for me. I would appreciate it very much. It's free. We're going to have a wonderful speaker that's a longtime colleague of mine that's been in the industry for many, many years. His name is Roman Samuels. He works with Russell Investments. Their specialty revolves around tax smart investing strategies and models. So they're a strategic partner of ours and have been for a long time. So we're really looking forward to what he has to say and hosting that webinar. It doesn't cost you anything. You literally just go to our page, find the registration link. It's on the post, and register and join us at noon on June 2nd for that webinar for market economic outlook and tax smart investing. And with that, let's wrap the show. Record highs on the S&P 500, NASDAQ for the sixth straight week. Jobs report that doubled expectations. The Iran ceasefire tested strain and somehow still intact. AMD and Disney reminding us why earnings season really matters. Kevin Warsh 1 vote away from the most powerful central banking job in the world, with full Senate vote expected Monday. This market has climbed a wall of worry all year long since the beginning of 2026. Oil above $100 a barrel. Inflation still hot, still sticky, and a Fed in transition, and it is still setting all-time highs. That doesn't mean the risks are gone. It means the earnings engine underneath is powerful enough to absorb them for now. Stay invested, stay informed, stay patient, stay in touch with us. We'll be back next week with the fresh CPI report, Warsh's confirmation, and the next chapter of the Iran negotiations. Thank you so much for tuning in. Have a wonderful weekend. We will catch you back here next time. Securities and investment advisory services offered through LPL, a registered investment advisor, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.